Welcome back to the channel, Crypto Trend Trader with a quick market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Merry Christmas to those out there who celebrate it, and happy holidays to those that have other things they celebrate. Just wanted to do a quick update on Bitcoin as we have seen higher highs over Christmas Day. Essentially, what I'm looking at right now is basically just a couple little quick ideas for like a pattern. Okay, so essentially we have a couple different options that we're looking at here. This is an ascending broadening wedge. You basically have higher highs and higher lows, but the highs are getting higher faster than the lows are getting faster. Then you have what is called a right-angled ascending broadening wedge. And what that is it has a flat bottom on it, so it has the same support on the bottom, and then it has higher highs, and you essentially oscillate inside that range, and after two to more realistically 3 touches is when it becomes extremely reliable, and you can start to validate this pattern. Now the idea being that essentially what's happening is price is floating up, and then you typically will get a breakdown more favorably as a reversal pattern because eventually it runs out of steam. But essentially, if we're looking at the right-angled ascending broadening wedge, which is what I'm paying attention to right here, we have the flat bottom right here in essentially like 3 different places. We put in this flat bottom, and then we have the top, depending how you draw it, 1, 2, 3, 4. So essentially we have 1, 2, 3 reliable touch points, 1, 2, 3 reliable touch points, and as you can see we've created this pattern right here. Now it is possible based on a couple of these wicks that this could just be like a neutral broadening wedge, but I think the green bottom right here that we've drawn in, as well as our angled top here in purple, is the most reliable looking right now. So basically, like statistically on this pattern, what you're going to get is a 34% chance breakout to the upside and 66% to the downside. Now it's not always a reversal or continuation pattern. It varies either way, and it doesn't always mean the end of the trend. It just usually means a move in that direction. Like 34% of the time will happen to the upside, and 66% of the time will happen to the downside. So we could essentially break out to the upside, come back, retest it, and then fail and get a reversal. In the same way that we could break out to the downside, come back up, retest, and then get continuation. So breakout of the pattern does not necessarily mean that it's changing the trend or a guaranteed continuation of the trend in that direction. It's just the breakout of the actual pattern. Typically, if it breaks out to the upside, you will get the measured move of the pattern, which would be from the top to the bottom of the pattern, which in this case, like I said, if we were to break out to the upside, essentially like right now, let's say we were to break out, that would give us a target of 27,675. And that's going to be 34% of the time. And then a breakout to the downside, inversely, would give us, the breakout to the downside is actually more reliable, but it's less quantifiable as far as the measured move is concerned. So you would take that 22,607 up to the top of the wedge, basically, which is like 25,000. So from the 22, let's say 5, just to make it easy, to 25,000, you're looking at a 22 to 25, $3,000 move. Well, no, I'm sorry, 22.5 to 25. So it'd be a $2,500 move. So you're going to get half of that distance to the downside. So essentially a breakout to the downside would give us about a $1,250 break. So it would be half of what we have right here. So if it broke out at 22,669, we would probably get closer to about 21.4. Roughly, but it could come down here, all the way down to the 200 moving averages. But essentially, what happens is you usually get the break, and then you get a retest of that range. So that retest of the range is going to come into line with essentially what would be the wick orange bottom right here of the wedge, right here at about 21,230. So we could get a break to the downside here, and then bounce this, and then it just becomes a neutral broadening wedge. and we just had a flat bottom temporarily, and the wicks were actually validated. Or in this case, we could get a break to the upside and continuation, or a break to the upside followed by reversal, or we could get a break to the downside followed by continuation, or a break to the downside, find support on the 200, and then continuation. So the pattern itself does not necessarily end the trend in one direction or the other. It just gives us a reliable measured move and a percentage chance of that break. So right now we're looking for a 34% to the upside break with a $2,500 move basically, and we're looking for a 66% break to the downside with a $1,250 move. So essentially our targets are to the downside 21,250 or 2,000, which at this point in time has a lot of confluence. Or if we break to the upside, our target would be 27.7, so almost $28,000. So in either case, it's a nice move. Typically, you will get at least half the move to the downside before a retest, but the retest is more common, as where to the upside once you break out. It's an extremely, extremely reliable pattern to get the measured move. So paying attention to that and trying to keep our bias out of the market. Now, what we do need to pay attention to as far as risk reward, though, if you're taking a short off this area, potential now for a downplay would be 18% from this area. So for half that move to play out, we're looking at a potential move of about 14%, as where that same move to the upside, the percentage is not going to be nearly as great. The move to the upside would be about 10% move. So you can see the risk reward right now with the tight stop loss in either direction, is going to make more sense to take the trade to the downside, because you potentially have a few percent to the upside stop loss, followed by a 15 to 20% move to the downside. As where if you took a trade to the upside right now, you have to account for the entire pattern as your stop loss to potentially get taken out of the trade. So you'd want to wait for the trend to break to the upside and then take a continuation trade or breakout trade with the stop loss back inside the pattern. So if it broke out and then failed and got back inside the pattern, you would get stopped out. But on any other instance, it would break out and get continuation. As where if you took a short right here with a small stop loss, a breakout would invalidate the trade and you would reverse to the upside, as where a 9% move back to the downside would happen before you'd even potentially be breaking back out of the pattern to get like the other 9% move. Now it is also important as well that we keep in mind that the typical Bitcoin pullback or Bitcoin move, once it tops out temporarily inside one of these uptrends, is like 36 to I think 45% roughly, or 36 to 40% rather. So if we were to say, for instance, top out right here, we would be looking at essentially a move. Let me get a little more zoomed out here. We would be potentially looking like, say this was the absolute top right here. We would be potentially looking at a move down, below. Let me pull this. Yeah, there we go. Let me look at it one more time. If we topped out right here, basically right where we're at, and this was the absolute top for the trend for now, and then we broke down and then got continuation after that, the average pullback is going to be 36% in an uptrend in a bull market. So we'd be looking at a $15,000, roughly $16,000 Bitcoin, as where we could pull back as high as like 40% and then continue to the upside, which would bring us down to about a $14,750 Bitcoin. So we could get quite a massive pullback at this point in time once we do top out, followed by continuation up to like our next targets, in like that $30,000 to $50,000 range, as where once again, continuation move has much less to yield here. So you don't want to get bearish, as we are still in an uptrend and continuing to the upside. But at the same point in time, this is an extremely risky place to buy. Much better off, in my opinion, waiting for a substantial pullback off of one of these key moving averages, the measure move of a pattern, or a previous support formed as resistance. So that's where a lot of these numbers come from, like the 16,000 range, 16.7 range, the $20,000 range, or any of the ones we just discussed in the video. So while I'm not necessarily saying that this is going to be the top, and I am still long on crypto at the moment, this is a key area that you'd potentially be looking for a top out to occur. And then once again, we are exhibiting quite a bit of divergence as well. We have from this point right here a top, this point right here, followed by a lower top, and then this point right here, 1, 2, 3 higher highs, and 1, 2, 3 lower highs. So if this tops out right here and runs into the resistance point from our 2 previous highs, which is near where we're at right now, and then starts to sell off, that is exhibiting 3 drives of bearish divergence and potential for this pattern to be topping out. As where if we look at the TD MACD, this high right here, this high right here corresponds with this one here, and then finally this one here corresponds with this one here. That would once again be 3 drives of bearish divergence. But I don't really like the way this one looks. I like to typically find the bearish divergence off of like the reversal in the trend. So where we see the green histograms, I would count as a point, like a peak, and then here again as like a peak, and then finally here again as a peak. So you could use this point right here as a second point, and then this as the third, and it would just be just as viable. But typically, I would rather it be off of the peak here, and the peak here, corresponding with a peak here, and a peak here, which is not quite what we're getting, so it's not nearly as clear. And then also I would like to see the divergence line up a little clearer on these, as where here we got convergence. So I like more things that I have to line up based on my system and based on my success rate with these different things, more factors, patterns, etc. More likely I feel like they are to play out, and the more weight I give to them. So paying close attention to that, but at this point in time, I'm expecting either a massive move if we get the breakout up another like 2,500, or potentially a pullback in the range of like another 2,000. And then if we do break out of the pattern, potentially another 1,250. So move to the upside about 2,500, or move to the downside close to 3,750 to close to 5,000. So we are looking at extreme volatility in these markets. Obviously, fundamentally, crypto and Bitcoin specifically are looking good, as where some of the smaller cap things like XRP and some of the other cryptos have potential to blow up, as the SEC has their sights set on them, and they're basically just looking for the low-hanging fruit scam trash coins and targeting them for potential extermination. So we may see some of these go away. I think a key warning sign as far as XRP Ripple is concerned, when the devs start moving operations outside of the United States, that's probably an indication that they're doing something illegal. In this case, it would be XRP is potentially identifying as a security, which if you look at a lot of the information they put out and promises they have made, I think it's more likely than not that the SEC will rule that they are a security, and even if they don't go away completely, they will face massive amounts of fines, and the big scare is potentially them getting delisted, which a lot of the other sketchy exchanges probably would keep them on, as well as exchanges outside the United States. But if they are ruled as a security, they would be an unlicensed, unregistered security, and therefore any U.S. exchange is going to drop them. And we'd see obviously like corresponding action in the price, such as a 50% in 1 day pullback. So got to be careful here. A lot of these coins have been around for years, or cryptos have been around for years, and have a cult following to them, or a crypto cult, and you just really got to be careful, because based on technicals alone, things have been putting in lower highs for the last 3+ years. So around 3 years. So to me, there is nothing technically that would tell you that XRP is bullish, and now with the fundamentals as well, just looks like it is going to make some ripples in the toilet, and we'll be looking at the big flush here before long. And I suspect that quite a few of the other cryptos that have been around for a while are probably going to be targeted as well, as were some of the newer trash coins that probably are just as likely to eventually get targeted, have been around for less time, so there's less of a case built and evidence. And if there's one thing thing I know about the American U.S. government. They like to take their sweet time and build a massive case and then just hit you with it all at once. So when the SEC hit them with that news, I suspect we'll continue to see dead cat bounces like 10, 20, even 30%. But those will be, in relation to 50+% sell-off. So keep in mind that Ripple broke key support when it dropped down below 25 cents. And although it has bounced back up and gotten a dead cat bounce back above there, it's very likely that it will consolidate around that 25-cent range again before making a move either back to the upside if they have fundamental positive information, or continuation to the downside, which is more likely in my opinion, as the SEC doesn't tend to make mistakes as far as things like that are concerned, and typically the exchanges will fall in line because nobody wants to fight the U.S. government because they have unlimited resources, because if they run out of money they'll just make more. So there you have it, guys. Crypto Trend Trader with a quick update on Bitcoin, and also a little something on Ripple, aka cripple my bank account. Sorry to hear about that for all the people that lost out on that one. Just one more reason you should not join a cult, and you should never be all in on any asset, because you never know when the SEC regulators, whoever, are waiting in the dark. So there you have it, guys. Crypto Trend Trader. Merry Christmas, and I'm out of here.